This is a short video for an actual response to David, since a video is easier to explain. As you can see, the first issue here is if 900 resistance is to become the top of this four wave, uh, meaning if actually we can count an ABC in this swing, but either way, if 900 becomes a strong resistance, the 54% chance of a new low will be triggered, and we are going to make a new low against the pivot of November 24. But the probabilities are in favor of a break to the upside of the 900 resistance to see C equals A. If this is a target C equals A, we mean a projection of this wave A or 1, and this would be the B or 2. If this is the scenario, we have a target of 974.58. That would be our target to C equals A. Okay. Until this time, we cannot make sure if this is a third wave up or a C wave. So we are not going to get all fuzzy about it. So our target would be C equals A up until this point. If we can see a break to the upside of the 1000 resistance, we'll be there in alert to see if this becomes a third wave instead of a C. But up until this time of 1000 resistance, we'll be looking to C equals A. But the problem is not that if the problem actually is to see if this is a minor wave or a major wave. Okay, let's see the count. This count is wrong, it's automatically made by the software, but I don't agree with the count. If we follow this count, the wave 1 ended up here, and this is our wave 2. This is a weekly chart in this case, and if this is the scenario, this would be a minor 4 with a third wave, this third wave, that it wasn't completed. But if we manage to change the count to the count I prefer, this count has several consequences. The first consequence is that you don't have that one here, but you have it here in this pivot. So you have it in March 21 instead of January 25, the week of January 25. So if this is your first wave, this would be a shorter wave 2 if you prefer, in a weekly chart, and this would be a completed third wave. If this is the case, we have wave 1, 2, 3, 4, and 5. So we have completed the third wave, and what we are looking to is a fourth wave of all the down movement with a 49% chance, but the software indicates a 49% chance of a new low with this count. If we switch this pivot of wave 1 to here, the probability of a new low gets triggered from 49, as indicates the chart, to 62. That is extremely higher, comparatively speaking. So we have a first target in 900, as we spoke earlier, that was fulfilled actually, and the second target, the secondary target, is little above 1000 resistance. So we have to wait to see if we can manage to see a break to the upside of the 900 resistance. And in that case, yes, we have a C equals A in 974.58, or if you prefer, the resistance of 1000. But a major, the second, I said several consequences of switching this pivot here to here for wave 1. The second consequence, the most important consequence of this, is that if you count from pivot to pivot, from here to here, is different from counting to here to here. If you count then wave here at March 21, you have 2, 4, 6, 8, like 10 weeks up from pivot to pivot. Those 2, 4, 6, 8, yes, 10 weeks from pivot to pivot. So for symmetry of waves, you need that these four at least it will take 7 weeks to 13 weeks. So it's considerably lower amount of weeks that if we take this as the wave 1. So we need 7 weeks to 13 weeks from pivot to pivot, and we only have 2 up until now. So we have to see the market to break to the upside 900 and go upside to the 1000 mark in no less than 5 weeks more. So because if you take less than 7 weeks from pivot, even you can, as the pivots are extremely close one to another, this is Emini futures, not the Standard & Poor's directly, you have the 2 weeks, the week previous to the lower pivot, you can count it in, since there is not much difference. So you have 3 weeks inside from pivot to pivot. Now you need at least 4 to 5 weeks to ensure that this movement you have here with a potential target of 975 to round it up, to manage the symmetry of waves, you need at least 5 weeks, I repeat, to make able to compare this swing to this swing that is the reference movement. If you can do that, this will become a minor wave, as it was stated in the comment of the previous video, that is in Spanish actually, but the comments are in English. But if this is the case, if you fail to take 5 weeks more in the up movement, yes, you will be in a minor wave that will complete this count, that at least for now you can count 5 waves actually pretty good. If you assume that on October 17 that you had a higher high than the pivot that we are marking here as a fourth. You have here, if you assume that this was a failure, yes, you are able to count 5 waves. If you assume that this wasn't a failure, you are in trouble. But the main target here, the main reason of the analysis is, if you break 900 to the upside, you have a 975 target, and if you take 5 weeks, this movement will be referenced as a companion of this movement, and there you will go lower to look for a 5th wave to complete this entire bear market phase, to then, yes, to be able to go to the 1200 zone as a B wave of major proportions.